All right, you guys, I'm so excited for this episode. Listen, we have Jahlinda here who is super, super knowledgeable in life insurance. And as an entrepreneur, you definitely need life insurance and just investing in general. So I wanted to bring her on because, again, she's super, super knowledgeable. But I'm going to go ahead and allow her to introduce herself. Jahlinda, go ahead and introduce yourself.
Absolutely. Thank you for having me. Again, Jahlinda.Jones with Insure Financial Group. And we are a local life insurance agency, but we are actually licensed in 16 plus states, and we can always add a license. It really doesn't take too much. But yes, we've been in this industry for over 18 plus years. And what we do is we specialize in educating people on the different types of life insurance and how to actually purchase the type that's going to be best fit for you. So it's more of a ring that fits your finger versus just one size fits all, because that is definitely not the case.
Got you. Okay, because I'm very happy that you said that
Mhm.
because on my channel I talk about entrepreneurship and YouTube and digital marketing and all that stuff. But life insurance is extremely important, right? You're hustling, you're building your brand, you're building your business, you're doing all this marketing, right? But a lot of us have families and loved ones, and kind of talk about the importance of that and just the educational background because I feel like people wait so long to get life insurance,
Mhm.
or when they need life insurance, it's too late. So try to go into that for people.
Absolutely. So what you're speaking of, there's actually two lanes there, and one of them is insurance that you would have for your business and insurance that you would have for your individual and as a family. Let me ask you, which one should I go into first? Because I can do both, but which one should
Hey,
I
I know you got the gems. I know you got the gems. I know that. So let's start with personal,
start?
because I think business, in theory, right, might be a little bit, I wouldn't say complicated, but we'll start with personal first to make sure they get themselves right, and then we can go
Mhm.
into the business.
Okay. So let's start with the individual person first. And I will say that a lot of people, when they think about life insurance, the first thing they think of is death. But it's
Mhm.
really for the living, it's a living benefit. It's for those that survive. And so when we think about just lifestyles in general, most of us we're living for the present, what we can see, what we can experience in the now. But we all know when you get a cell phone, the first thing you think about is that insurance on the cell phone because all it takes is one cracked screen to charge you $100 and $200 to get a new phone.
That's
When
true.
that protection for your cell phone is what keeps you in business. You feel good about your protection because you know that that's going to cover if you need to replace your phone. Car insurance, most of us are required to have car insurance because if you get in an accident, you already know that if someone else calls it, you might be getting a $10,000 check. And those things we're so comfortable with. But
Right.
life insurance, it's like this myth. We don't really understand it, so we avoid it. We don't talk about it. It's kind of taboo. But really, this is a strategy that it's for succession planning, generational wealth transfer. So let me just break it down like this. Life insurance, and I'll come from a side of mistakes that people make when they're getting life insurance, is waiting until it's too late. But
Right.
really, life insurance is determined by mortality tables. Well, we all know that you're more than likely to live the longest at your youngest age. You have a lifespan in front of you of more than 50 plus years. But when you get down the line, okay, now you're actually knocking on that window of, okay, you're about to get out of here. So,
Right.
what people have to understand is it's actually cheaper to get it at your youngest and healthiest age. So, like, for example, Walt Disney, his family actually got it when he was young. So, when he actually wanted to build and start Walt Disney World, he was able to use the cash value in his life insurance to start that dream of entrepreneurship.
Wait, hold
And
on, hold
so,
on, hold on. You can't just skip past that. You
Mhm.
can hold on. So really give people what that looks like because
Okay.
what you said is really impactful, and I don't think people really understand what you're saying when what you I know because I did a little research. We done talked a little bit, right?
Hmm.
But but I don't think people really truly understand what you just said like that. So really break that down in like layman's terms. Like how do
Okay.
you start young and then get the cash back? Like what is that?
Okay. So yeah, I kind of did throw that out there. That is whole life insurance. And a lot of people don't know, but you can get a life insurance policy on a child as soon as they're 14 days old. As soon as they get that social security number, you can get
Mm,
life insurance on them. Why would you do this? Because that's when you can get the most life insurance for the cheapest amount. So a baby getting life insurance on them, $100,000, one that could cost like $12 for 100,000. But if your strategies are actually to build wealth for them and you contributed $100, that could get them from anywhere from 100,000 to 200, $300,000 in life insurance. That it starts there, but the longer they live, the more it's worth. And when they're in their 50s, they have over a quarter million in cash value from that life insurance because the type of life insurance it is whole life. So some people they say, oh, get term because it's inexpensive. No, that's a cheaper policy because it only has one job, and that's to pay if you transition. There's no other benefit to term besides it being a benefit for your family.
mm,
Whole life is the one where while you're living, you have an emergency of anything of that nature, you can pull money out of your life insurance. It's like a glorified emergency savings because instead of having one job of just having money saved up and stored for an emergency, it's also going to pay out if there's a death. It'll pay out a retirement income if you needed it to. It also builds dividends. So this is
mm,
something that in my industry, I think we have to know what comes with the products that we're selling people because they need to know the features of it. There's a lot of bells and whistles of whole life that you wouldn't
mm.
know if you just go in the mindset of, oh, I just need something cheap and I need it cheap and quick. Okay, well, maybe you're just going to get turned. But we have to know when it comes to the mistakes that depending on purchasing life insurance, depending on the time you buy it. So it's always depending on your age. The older you are, the more you're going to pay for life insurance because they're literally betting on, okay, when you're going to transition.
Right.
The next one is the strategy. If you just bought a home and you're really not trying to add on another large expense, but you want to have life insurance in case someone transitions that bought the house, if there was a two-income household that purchased a $400,000 house, then you might want to buy a $400,000 term policy for about $20 to $30 so that if anything happened, that money would go to the living spouse and they can keep living that lifestyle or pay off that house. That's something that a lot of people don't think about when they talk about the strategy of life insurance. You might want something cheap if you're making another big purchase, but if you're talking about wealth building, that's when we talk about whole life plans where you can actually build money in your policy. Where, let me ask you,
Hmm.
at a bank, what is that normal interest rate at a bank on your money you put in there?
Normal interest rate, you put me on the spot.
Mm-hmm.
Uh, it really depends. So I know on like credit cards, it's 18 all the way up to like 30%, even higher,
Yeah.
depending on, what's your credit card. I mean,
And
what's your,
I'm talking about that earning
yeah.
potential in your bank.
Oh,
So
oh,
what did
ooh,
they give you for letting this sit in the bank?
maybe if you're lucky, 1%, if that, it's like less than that.
Exactly.
It's
So
like
that bank is
super,
saying, hey, let us hold your money and we'll give you a 0.1, 0.2%
yeah.
interest rate. But life insurance, depending on the company you get your life insurance with, you can get a guaranteed 4% interest rate just on the cash value. And that's
Mm,
guaranteed. So that's already beating your bank. But on top of that, depending on the mutual insurance company, that's an insurance company that pays dividends to the policy owner, they will also give you a dividend as well. Now, those aren't guaranteed. No one's required to pay a dividend, not any company, but as they're profitable, which depending on the company you use, that has a track record of doing this, they will pay a dividend into your life insurance as well. Well, that's
mhm.
something people are like, why don't we know about this? It's just because the research is out there, but if you don't know someone that's educated, because there's a lot of insurance agents, but not all of them are the same that are actually taking this serious as,
Right.
okay, what am I selling people? Some of them, they sell what the people tell them to sell because they're working with that company. But there's other insurance agents that are licensed with multiple companies. And so they can give you more options than just one. And that's when you see that flexibility, you'll see, okay, so this is why I would get a term. This is why I would get a whole life. Another thing too is just knowing what your budget is. That's going to determine what you're able to purchase and afford. And also, the last thing I would say is health. A lot of us, we wait to get life insurance when we're older, but now
Mhm.
you're going to the doctor more, your health has changed, you're taking medications. That all impacts if one, you'll even qualify for life insurance, and two, how much they'll offer you. So when I was saying earlier, you could get almost six figures, $100,000 in life insurance on a baby for about anywhere from $40 to $60 a month. Where that same 100,000, if you wait to age 65 to get 100,000, that's going to cost you $300 to $400 a month, because now they're like, no, you're about to transition.
Right.
So it's a lot more risk, and it's all about risk in life insurance in the industry. It's about, okay, I'm trying to leverage a risk, and you're trying to protect the risk of loss of income, or just loss of asset management. So that's what I would say about that.
Yeah, yeah, yeah. So that was, listen, we could literally cut the video right now. That's how much game she gave you guys, like, for real. But I do want to break down some of the points that you did hit, that
Uh-huh.
I think we should definitely talk about. So when you discuss cash value and using the cash value, how do people tangibly do that? Because I know they heard it, right? But how do you actually pull from your life insurance, and how does that work? And then I know personally, because I have life insurance, what is the guaranteed and non-guaranteed when people show that when it comes to cash value, that I think a lot of people really need to know.
Okay, so your first question, how do you just access this cash value in your life insurance? So, like we said earlier, that's a whole life plan that gives you that option where what's happening is, let's say you do get $100,000 death benefit life insurance policy in whole life. Well, as you're building up and paying those monthly payments of life insurance, they're giving you access to some of that death benefit while you're living. So in
Mm,
10 years, as you have this $100,000, they're saying, hey, you have access to $10,000 while you're living. Well, you can actually call your agent or
mm,
call the insurance company and say, hey, I just want to pay cash for a car. Can I pull out $8,000 and pay cash for this car real quick just to get me from A to B? They'll say yes. Because your money is there and you have access to it, they will put that money in your account within 36 to 48 hours. So
mm.
now you borrow from yourself, you become your own bank. And the thing about becoming your own bank is now you get to determine when you pay yourself back, how soon you pay yourself back, or if you ever pay yourself back. What that means is, let's say you decided, okay, well, I do not want to pay that money back. Well, what happens is you borrowed 8,000. That $100,000 policy was still growing, so now it's worth 110. You borrowed eight. Instead of your family getting 110, they're getting $102,000 because, hey, they gave you some of the money while you were living. So they're
Right.
going to give your family the rest because that you have borrowed from yourself. So that's how it works. That's how you borrow from it. And now I'm trying to remember, what was that second question about the cash value?
The guaranteed versus non-guaranteed, because I
Oh,
know
mhm.
a lot of charts show that, like, what's your guaranteed money versus non-guaranteed, and how that kind of works.
Yeah, so if anybody has actually seen a quote for whole life insurance, it just looks like a ton of numbers, like tons of columns. And so what he's talking about is there's a guaranteed side and a non-guaranteed. What I mentioned earlier is that the cash value that's building up in your life insurance, that's guaranteed. So they're going to actually show you what they will guarantee in cash value growth and death benefit as the life insurance. So at any point in time, if you transition, they absolutely have to pay the death benefit, but you'll absolutely have access to a certain amount of cash value. So now that non-guaranteed side is the side that shows you your cash value with the bells and whistles of the dividend, actually putting an annual dividend dump into your cash value. So that is what's non-guaranteed because they can't guarantee the company paying a dividend. It's always based on how profitable they were that year, how things went, and so they're not going to guarantee it, but they put that column there because depending on the company and the strength of how long that company's been in business, they know that they should be able to pay a dividend back to their policy owners. And the thing about it, that's one of the reasons why they're so profitable is because they do that feature, use that feature. And so I would say there are companies that have a great dividend, but have elected not to use that dividend and pay it back. So you have to know and do your due diligence to find out what companies are actually paying that dividend. Because for myself, in our agency, we work with companies that have a track record. Like one of the companies we represent, they've been in business for over 111 years, and they have
Mm.
98 consecutive years. That's back-to-back years of paying that dividend. That's the strength. That's the kind of research you have to do to know and feel confident. Okay, I'm working with an insurance company that's building wealth in my policy as I'm building wealth in my policy.
Okay. And so with that non-guaranteed dividend, are you able to pull from that as well? Like you pull from the guaranteed or like
Ac- Yeah. So that's exactly what's happening. You're actually being able to pull from both the cash value and the dividend. So, which I should say this as well. People appreciate life insurance because it has tax-free benefits. So similar to the 401k or Roth, where you're building wealth in those financial tools, the life insurance financial tool gives you the access to that money where when you borrow from yourself, you don't have to pay taxes on that money because you're borrowing from yourself. The
right.
thing about it is the reason it's going to be tax free is because it's pulling from that death benefit. If you were to just actually take the money out, then you might have some tax implications there. So it's important to know that this is a way to have a tax free death benefit and tax free cash value.
Mm, got you. Listen, listen, you guys, like if you need life insurance, if, if you don't go and see her, I really don't understand what you got going on. Like you definitely need this information and definitely go see her. Now, we talked about the personal. You said that you're knowledgeable in business. What does the business side look like when it comes to life insurance?
Yeah, so a lot of people might not have been exposed to the business side of getting a life insurance policy for your business. But what happens is there's things called key person, executive bonus, where if you're building this business and you want to build up a some wealth and store some wealth for yourself where okay you need to buy purchase computers or something like that, just like in the individual you could borrow from your policy, you could borrow from your policy for your business as well. And this is a
Mm,
way to just build some wealth in your policy, but it's for your business owns it, your business pays for it, and so there's some wealth building tools there, but then also your business is the beneficiary. So when we talk about we're starting these businesses and we want them to be sustainable and here for generations, life insurance would pay the death benefit to the business. So now how much would it cost to replace you? They would pay that to the business. So someone who's sustaining that business can find someone to replace you and do what you do for the business.
mm, that's smart. That is definitely smart. Um, ooh, yeah. Listen. I thank you so much for being on here because I think a lot of people don't know this information.
Mhm.
And I know personally we've had conversations on just financial literacy. And
Yeah.
why do you think, especially within the African American community, the level of financial literacy is so low within the African American community?
To be honest with you, I believe that it's just a lack of the resource. So we have not had I guess access to this resource and in a way where we understood it. A lot of insurance agents, they're told, hey, sell them this cheap policy or sell something for burial. A lot of us, our grandparents, that's what they live by is buying a burial insurance policy where they're just making sure that if someone transitions, they can pay for burial. But that's kind of snatching wealth out of our generation because that money goes straight into the ground. They're not leaving the foundation of
Mm,
wealth with a full whole life policy, leaving over six figures. And honestly, it's just being able to act on the information when you hear it. Because I wanted to bring out this example. My father, like I said, he started this business back in 2005. And he was in the industry since 2002. And so what he had was relationships with people. And one of our family friends, I grew up with his family friend and family, where it was an actual Asian guy, and he owned a gas station. So he had this nice gas station. He had a beautiful home. We're in their beautiful home having dinners and things like that. Well, when he transitioned, He never acted on my dad saying, hey, you should get some life insurance. He said, no, we don't need that. We don't need it. Well, when he transitioned, one, his wife didn't know how to run that gas station, so they lost the gas station. Two, his wife didn't
Mhm.
have the income to keep that beautiful mansion they lived in. She lost the mansion. At the funeral, she asked my dad, why didn't you sell him life insurance? Well, as a life insurance agent, we can't force you to buy life insurance. All we can say is, hey, we're here, we offer this, we can
All right.
talk about it, but if you don't act on it, you could miss out.
Mhm.
Well, he has another friend. We went to church with this friend. Over 10 years ago, my dad met one of these males in the church, and he was able to sell him some life insurance. Well, lo and behold, COVID comes and he transitions from COVID. Well, his family, when he transitioned, got more than 250,000 of life insurance paid out to their family. Not only that, his wife was in the same circumstance where she was about to lose the house because she wasn't on the deed. Because of the life insurance, she could pay for the house herself and manage the
Mhm.
attorney to get all that information. But this is because the life insurance was in place. He did take advantage of that. And I broke it down on my Instagram story and showed them his premium. He was paying about $76 a month. And in 10 years, he only paid in about a little less than $10,000 for that life insurance, but his family got 250,000. Can we talk about a return on investment? There's nothing else. You can put $10,000 in fast
Yeah.
food. You can put $10,000 in your car insurance, but if you don't get in an accident, no one's getting paid. Life insurance, especially when it's whole life insurance, someone has to get paid. That is absolute guaranteed generational wealth transfer. And the last thing I'll say, because I'm preaching now, is that you can leave your family. You can
Hey,
leave.
I I feel you. I'm here. I'm here. This is amazing. This is
Yeah.
amazing for
So the
sure.
last thing I'll say is like, as we're building our $1 million businesses, we can leave our family $1 million before becoming a millionaire just through life insurance. Because if you have the ability to pay, no matter how you create that structure, you can sign up for like $5 million in life insurance, depending on your income levels. Because usually they do it 10 to 20 times your income is how much insurance you can get. So you can get millions in insurance, and as long as you pay your monthly payment, your family could get left millions of dollars. So why not have this on ourselves, on our children? So we are guaranteeing wealth transfer. We have to. We absolutely have to.
Yeah.
Because like something I wanted to bring out, and I just really want to bring this out. Forbes was saying that in year 2053, the African American and Latino wealth net worth will hit zero. And that's because we don't necessarily have wealth. Like our median wealth right now is 3% and 4%. That's how many of us are actually that's our wealth right now. We own 4% and 3% of the wealth. The white Americans, they own 84%. We got to wake up. We have to do something different.
For sure. For sure. I agree. I agree. Well, listen, you guys, I know she's bringing the heat. We might have to do a part two because this was amazing. I thank you so much for coming on this episode because I know I can hear the passion in your voice. I feel the same way about digital marketing. And guys, life insurance is so important. So if you don't understand at this point why you need to get life insurance, we can't help you because she done dropped so many gems that are so impactful within our community. So I definitely want you to reach out to her. If you see this video, no matter your state, she can help you. So definitely reach out. Jahlinda, do you want to give them your information so they can definitely come out to you? Because I definitely want them to have it.
Absolutely. So you can find me on most platforms at my name at Jahlinda. That's the easiest way to find me. Our website is Ensure Financial Group. You can find on the contact page how to schedule a calendar appointment with us. And just like I'm educating here, we like to talk to you personally one-on-one and go through that same educational process, but then also show you what works best for you. So we're actually building and developing a website that we can break down and answer a lot of questions through a course. So that's what's in the works and to come. And then also something that I noticed that's needed too is people need to know how to budget. So I'm creating something that talks about how much does it cost to be me? And that is just so relatable because most of us don't know how much it costs to be us on a monthly basis or annually. But if we knew, it would open our eyes to how we're spending money and then how we can actually use some of those funds to build wealth.
Awesome. Awesome. Well, I'm going to make sure that I link all her information down in the description. So yeah, if you have any questions or anything like that, she would love to help you. But guys, this was an amazing episode. I truly hope that you guys enjoy it. Until next time, be easy.